Talk us briefly through the key findings.
I think the key findings are that the fees have risen. The momentum continues from last year in 2010. In fact, they have doubled for this quarter compared to the quarter before. And the only outstanding deals that were not done in the first quarter that you found last year was an initial public offering. Out of that $157 million US, half of it was mergers and acquisitions. And I think it's a positive story for Africa.
Yeah, absolutely. We do know that in terms of investment areas of interest, the energy sector, infrastructure is proving to be the most attractive. Talk us through that.
Well, power and energy are key to the world, and I think that investors are looking to shorten where they are in the value chain. Yeah. So you've always observed that China has a strong interest in commodity and energy companies, and in this case has also gone into Uganda to acquire a shareholding in an oil exploration company.
Talking about China, within the space of mergers and acquisitions, this is where we've seen the Chinese very active. And I find that interesting because the general sense is that China's got its state-owned investment vehicles, it enters into deals based on bilateral political agreements, and then it starts companies from scratch. This idea of Chinese acquisitions in Africa, how prevalent is it?
I think it depends on the country that they're considering and what commodity they're looking at in terms of the lifespan. Where possible, as I mentioned, you wish to shorten the value chain, and where possible to secure mineral rights, and you have the resident experts in your country. In the case of China, they can take those people into that country and start from scratch. But in other countries, those companies are already in existence, and you don't have to reinvent the wheel, where it's possible for you to have a shareholding and participate in being able to source that commodity and energy.
Also, China's investment strategy has raised some questions, you know, the whole idea of soft loans and concessions in exchange for raw commodities. Are some of these banks involved in structuring some of those arrangements?
I think the Chinese involvement is varied across each different country, because there are 48 in Sub-Saharan Africa, so it would depend on the government monitoring and regulation in its ability to be able to invest. And there are certain restrictions that certain companies impose in wanting to hold on to the mineral rights. Right. But essentially, it depends on each country, and each country is independent, albeit that you know, East African countries will have a similar way of approach to trade and industry.
You mentioned Uganda and the fact that Uganda accounts for about 51% of investment seen recently. Is that a story of the burgeoning oil sector?
Yes, it is. It's about oil exploration, and as you've seen with oil prices rising, it only makes it a far more compelling investment, and it's best to shorten the cycle of how quickly you can get that oil off the ground. And if you have the expertise to be able to fund that exploration, then you'll also be able to benefit.
After Uganda, obviously, it's a country like South Africa, and I think there it's the resources, the infrastructure, just the ability to do business. But what about the other growth stories in Africa? Countries like Angola, like Ethiopia, like Kenya, that have phenomenal growth rates, have really outperformed the rest of Africa, and you got a sense that investors wanted to go there too.
I think investors go where there's simplicity and sophistication in regulation, and they will take longer to seal those deals depending on that country. So in the case of Africa, if you look across where the commodity and energy is, that is where the investors and advisors will be. You mentioned Angola, and I think that there's a great deal of activity in Angola from a pure sense of how many commodities you find, and from a population size. So I think the work is happening in the background. The survey only shows what has been done and dealt, and depending on the country, it will take its time before it gets to market. Let's
talk about equity capital markets issuances, which reached $1.9 billion in the first quarter. What do we read into this?
I think what's interesting is a point I made earlier, is that we saw no initial public offerings, so no new listings. But I think that will be a trend that will continue maybe in other quarters, and maybe a seasonal issue. What we've observed this quarter is the issuance of convertible bonds. So raising a bond issue that is converted to equity. For most, I think, investors, they would look for equity exposure, and if that is possible through the issuance of convertible bonds, it favors the company to issue in that way.
And what does this tell us, just by way of the whole debate about whether Africa needs foreign direct investment or portfolio flows? Because if we're looking at portfolio flows in this regard, then very few countries were going to stand to benefit.
Well, the portfolio flows are going to improve. I think you have to consider the sophistication of the stock exchanges. And our own participation and that of our competitors is improving that. And by that, I mean going live with data on the Ghanaian Stock Exchange or Zambia or even Nigeria. So as more markets open and the simplicity of being able to have electronic trade and settlement, so you will see portfolio flows going into those countries. And I think that's a growth story. And for pension funds in emerging markets will have a preference to go into other emerging markets because they understand the volatility and because of close proximity, and you will see that, as you will see with the South African pensions.
And I suppose in that you've just answered the next question, which was the issuers of equity tend to be South Africa, Mauritius and Nigeria, the usual suspects.
Yes, which are the strongest and largest and most influential stock exchanges across.
Okay. So generally, the banks have done well in terms of earnings. Can you just talk us through how they make their money through fees?
Well, it's a combination of factors. It's difficult to be able to tell you the breakdown, but as you've mentioned, it's about mergers and acquisitions activity, and you would charge a fee to do the work and perhaps participate on the upside. It's a similar story with the equity capital markets and bond capital markets in being able to facilitate the issuance of those bonds. And be able to create those structures. There would be a fee, and there would also be some form of participation should it be successful. Is
there a ranking of banks? Could you give us a sense of which are the best performing investment banks?
I think it varies depending on the deals. What is interesting is that you have global multinationals such as Goldman Sachs, Barclays, you have the usual suspects also such as Standard Chartered. And you have even South African banks such as Investec and Standard Bank participating. All those banks have roots inside these countries, and it's no longer a story of merely flying into a country, doing a deal and walking away. And it's no longer just about capital flows that can move out just as fast as they came in. So the story on Africa is a 10-year story, even more. And we've seen it perform extremely well. So it's not a question of when, it's now.